All right. Good morning. Good morning, everyone. Bear with the sound of my voice while I'm still sick, but I'm on the upside. So, kind of a start to an odd week. NVIDIA is a threat to the market, and there's really no way to gauge the impact of this. They keep putting NVIDIA on this pedestal and lifting it higher and higher and higher. And NVIDIA continues to jump that hurdle. It just easily jump that hurdle. The problem though is not looking back at what NVIDIA has done, because I think by all metrics that's going to be a no-brainer. It's the forward guidance, and if there's any slowdown to that, and if you kind of look at what the earnings have been doing, anybody who's mentioned that AI can benefit them and that they were going to spend money on AI, who then reported and didn't make the kind of money they had suggested they could, they got a beat down. And it didn't matter how good they had done in that quarter. It also mattered what they said they were going to do for the next quarter. And so we've seen a lot of things that were beat down coming back because they didn't make outlandish promises and kind of kept their head down and just kept grinding. And the ones that were flashy and out front, who maybe aren't living up to the hype, they're the ones taking a smackdown. And last earnings, everybody had suggested NVIDIA just could not do better than what they had already done. No way they were going to beat metrics and have a great forward guidance and all the different, and it still did it. It still blew everything out of the water. Can it do it again? So, the great thing about options is you can play both sides of the fence. You can just play a big move up and down if you want to. And it sounds like, one would wash the other out, but it actually doesn't. Um, there is a trade for that. Of course, there is. So, something to consider. It's not going to be a cheap one, as you can imagine. It's going to take some buying power. And I think the only consensus at this point when it comes to NVIDIA is that the move is very likely to be big. But like we've said before, the more they talk about it being a big move, big move, big move, the more people hedge. And if nobody's caught off sides because everybody's hedged, then where does the big move come from? So we'll see. It's on the table. I want to put it out there. NVIDIA can move all of the market. And it won't just be by the report of how well they did, it will be based on their forward guidance. And we'd have no idea what that forward guidance is going to be. So when you're looking at a candle chart, the Qs, SPY, whatever, you have to always remember that there's outside forces, outside influence that will move that market. Things are looking pretty good, all things considered. Um, there are changes happening in the Middle East due to that helicopter crash last night. Too soon to say how much worse that's going to get. Japan is flat. The Russell, the Dow, Hong Kong down about 0.25%. It's kind of fluctuating around, and the Nasdaq is up 0.25%. Spot Gamma isn't out yet this morning with their AM edition, but I'm expecting a sideways market as we wait on NVIDIA, and we also have VIX expiry on the table. And you wouldn't think that would matter at first blush, the VIX having expiration, but there are VC funds, volatility control funds, and millions and millions and millions of dollars are traded based on where that VIX is. It's non-discretionary trading. So They don't care where the stock is at. They care where the VIX is at. Then they deploy funds, deploy capital all over the place based on what the VIX is doing. So we're liable to see some changes in those VC funds at VIX expiration, which makes it more important than it seems at first blush. We keep hearing that we're going to just stay bullish until we get a macro impact that changes our course. And so, we're all looking for what is that macro impact going to be. Got a lot of Fed speakers. Any one of these fools can chew on their foot, chip teeth, and knock us off course inadvertently, just, on accident. So got to take that into account. We're going to get some front end auctions. They're not showing an 11 a.m. auction or a 1 o'clock auction, but I wouldn't rule it out. Like I've said before, just because you don't see it on here doesn't mean we aren't getting something. This record high copper and gold is another macro piece of the puzzle. It's got ramifications down the road, right? Just like high food prices has ramifications, high oil prices have ramifications. And I seen agriculture was up this morning, DBA getting a little bit of a turnaround there. Might finally start to see a little bit of a decouple with chocolate, cocoa. Maybe, finally. So as you can see this morning, we are above the pivot point. The central pivot has moved down, but it is overlapping the previous pivot. So far, we've got an MDP that's a missed daily pivot. We haven't hit it. We are resisting against R1. If we had opened above R1, we would have expected it to provide a little bit of a support, but we're underneath it, so it's acting as a resistance. We are flirting with it. Liquidity resides on the other side of the pivot, so we could rise up into it a little bit. But what we're looking at here is the possibility that we opened gapped up into an R1, and then we will fade down to the pivot as a magnet, break that pivot to go down into an S1. Can't see it because of the channel piece, but the S1 would be 5311 cog line, and that would drop us down into the ADR low. Be an inside day breakout to the downside, which we already have an inside day breakout to the upside. Gapped up on a Monday. Gapped up on a Monday is not necessarily a bad thing, but we want to watch for exhaustion gaps. Gaps are not all the same. When you have a gap at the top of a run, then you have to be concerned with an exhaustion gap as the opposite of gap and go play, which is oftentimes what you find when we're down at the lows. Now, this is not a really large gap. Small gaps tend to fill. Larger gaps tend to stick around for a while, more than a day. So we still have 53.37.25. It's from this May 15 candle. The resistance is just the high of that candle. But we also have this candle to deal with. So 53.50, 53.32, which is a cog line, and 53.15, it's close enough to the 53.11 cog line. Could also take yesterday's price, project upwards 50%. That would give us 53.40. So these are the levels just from a daily point of view that we have to be concerned with, plus this gap close. And that's our weekly channel that we have to deal with. Now, it makes sense to see that we pulled back here last week. We got that breakout, and then we pulled back inside it. Remember, liquidity resides on the other side of the pivot, right? So we would expect there to be liquidity up here. And now that we've gotten this high, set that high there, that's where the new liquidity zone is. But that is the area that we have to be mindful of. We got to get through this zone, and we can pull back and keep retesting this until we finally get through it. But that is the issue, is this liquidity right here. They sold into it for 3 weeks, weren't able to get through it. We fell out, came back up, tried it again. We weren't able to get through it and backed off again. This candle from last week is exactly like this candle from March 18th. So we want to see how this plays out, and it's what we want to keep our eye on. Getting through that 53.50 is an options level of concern. It's a big level, psychological level. Even this morning on Bloomberg, one of the biggest bears out there finally capitulated and is now calling for a 2% run in the S&P by the end of the year. And it's not his projections that matter. It's the fact that he was one of the last holdout bears that kept saying, nah, we're going to pull back. There's so many things that are wrong. It's just not going to rally. And even that last bear has finally capitulated. Of course, he was wrong. He kept saying we were going to pull back all the way through this run in 2023. At least he stuck to his guns, I guess, through the whole thing. But, when everybody's looking up, you might want to look down, right? It's kind of the warning, I suppose. Glad that dude isn't managing my money. So with us being basically flat this morning, there's no edge to discern which direction for the ADRs. We're not leaning more heavily towards one than the other. We got the volatility trigger down at 52.92, which is a cog line. The 10-day, the 3-week, zero gamma, everything's below us. To the upside, we've got the call wall at 54.22. So they did finally roll up on the other side of OPEX. That's bullish to see that call wall has been rolled up. But that put wall not rolling up kind of takes some of that bullishness as a bias. It kind of takes it off the table a little bit. Would have wanted to see that. right? That put wall being brought up with the call wall being brought up. Instead, just having that call wall moved seems like they're just protecting against some whiplash. Say NVIDIA shoves everything really hard and fast to the upside. But as I started the stream saying we could go either direction in NVIDIA, if you're looking for a big move up or down, then keep the put wall in place and roll the call wall up. And that way, you've got a wide band on each side. That seems to be exactly what they did. That makes more sense rather than trying to bullishly roll the call wall up and the put wall up. So it looks to me like they just made a room to the upside. Volume's a little light this morning, sitting at 44. Without a lot of economic agenda on the table, got to kind of ask where everybody's at and whether or not there's a reason to believe that there's some threat this morning. I don't think there is. I think it's just a whole bunch of hurry up and wait. No rush. So throughout the day today, we're going to lose these candles in the lower left portion of the chart. This is a 10-day, 30-minute volume profile with TPO in blue. So as the day wears on, this profile is going to narrow up. But as you can see, we won't lose any of the volume from the point of control until the end of the week, possibly into the new week of next week. So the only way that this point of control is going to move is through time. Either we sit here long enough that it takes these candles off the page and the point of control moves up to our next highest point, or we collect enough volume up at this level between now and Friday. So if we continue to chop and stay here around this 53.20 area, it's likely we'll build up enough volume to move the point of control within the next day or two. Otherwise, if we keep expanding higher, then we're not going to sit still long enough. And as the week wears on, really it looks like the point of control will fall first down into 53.11. And then once, actually those won't even be there at that point. It'll just, it'll be up here at 53.20. So that's where we're expecting the point of control to go, is here. Either because we stay here long enough to build the volume up, or because as these candles get wiped out, that'll just be the next highest volume structure. Still don't have a lot of support underneath this 53.20 area. So if we do break that low, the air pocket, we could fall right back down to the point of control relatively fast. 53.11 seems to be a line in the sand. It's a cog line. So, we turned around back here just underneath 53.11 last time. That still counts as the zone. It's a really nice bear trap example there. Surprised they were able to turn it back with nothing there, but we break that, then it's very likely we come back down to 52.50. I don't see much that would slow it down to get to that spot. This VPOC from last week has been hit. We hit it last night in the Globex, so we don't need that anymore. We did build one for Friday, so we'll just set it there. So any move to the downside, putting us back inside of Friday's range, will also have us contend with that VPOC at 53.20. We don't really have much yet. It sideways for a few days. We had a little bit of a run to the upside, and then we started to pull back. Now, typical trend trade, you pull back and continue that move to the upside. We've set the low, so the line in the sand is set. We've got our high. Two very clearly defined levels at your make or break. If we break this low, we'll retrace And if we break this high, then we can measure this entire thing and we can plot levels to the upside. But at this point, with this low set here and this high set here, we have to define this at this point. We have to get through this. Now we can take that out to a higher time frame. It wouldn't matter. It's still trying to negotiate those two peaks. The fact that we're completely inside day breakout is a good start. You know, that gap to the upside. But the fact that we're struggling with that R1 and we haven't been able to make it through there suggests that we're going to get a bit of a pullback first. The weekly expected move last week was showing that this week had more volatility priced into the market than last week. But when we looked at it, it was Friday in the morning, and it doesn't count until Friday after the close. So here we are. It's Monday morning. We can gauge last week's volatility with this week's volatility and just look and see, are the levels the same? Now, I didn't get out the calculator and draw this thing to the perfect exact corner line to line. It's close enough. That is the same as last week. So we have the same amount of volatility priced into the market this week as we did last week. You know, last week with CPI and PPI and PAL, all that. That same amount of volatility is present in this week. What do we have? NVIDIA and VIX OPEX. So the market's concerned, prices are up. We're going to expect some volatility crush once NVIDIA reports one way or the other. Just that unknown will be gone. We'll expect volatility crush from that. And then we'll get a change from the VIX expiration. $5,400 is pretty close to the top of that green line. It's not perfect, but our weekly expected move, 53.84, is pretty close to 5,400. I think if we get that close to the round number, we'll take it. We struggled with that 53.50 as a round number, and we have really just haven't been able to get through it. But I think it's when it goes, it's just going to go really fast. I'm going to be looking at some, they're not necessarily lottery tickets, but I'm going to be looking for some long trades up there. Maybe, you know, broken wing fly or something like that. Because why not, right? We could build the position with a decent enough risk reward and find a way to defend it. So we're still more than 2.25 above the 10-week. That still puts us a little light. We've spent most of the year farther away than 2.25% from the 10-week. So we're still not overbought. We haven't moved too far too fast. It doesn't owe us a pullback. And for the daily, we're still underneath that 1.5. Still not more than 1.5% away from the 10-day. So we're still not overbought, overextended, not due a pullback. There's a minor voodoo line at 53.11, which is also a cog line. 53.74, 53.89. Those are all voodoo levels. The biggest one is 52.46, which is that bright green forest voodoo line down below. I probably need to go check their website and see if they have an updated voodoo, because I haven't checked a couple of weeks. Sometimes they'll go, 2 months without updating them lines, and then they'll update them, 2 weeks in a row. So If you haven't seen me mention it in the chat, say by noon today, hit me up and I'll check to make sure they don't have anything more current. The China ADRs have pulled back about 0.75%, but over the last 5 days, they're still up more than 3.25. So, probably do a little bit of a pullback anyways. And it's not just the internet side of China. We can see MCHI also down this morning. Same with emerging markets, which is basically China. Things that are up: semiconductors, not a surprise. Uranium, gold, more semiconductors, gold miners, and the collective, the FANGs or the MAG 7, so homemade ETF. Nat gas has moved 10% in 5 days, and it's still up. Same with the Direxon Semiconductor triple leveraged bull semiconductor ETF. SOXL is up 10%, and it's up another 2% this morning. So I guess we could say it was up 8. Now it's up 10. It's going to be interesting, to say the least, how this earnings goes. If you've listened to the NVIDIA earnings that they last did, they were very confident on the fact that there's no slowdown to their processes. And the only hiccup would be that they can't churn this stuff out fast enough, right? That they've got orders lined up around the world to anybody who isn't on the ban list, and that they're continuing to try to adapt chips to fit the ban list to even be able to sell to those places with just a limited chip version. And it's hard to look at NVIDIA and think that they could still go up even higher after the bar has been set so very high already. But I think they can. And I wouldn't bet it. I wouldn't bet against it. I'll just say it that way. It makes sense to bet against them because of once you put the hurdle too high, it's almost self-fulfilling. They're going to collapse at some point. They're going to fail to make the market happy, right? We've seen it, when Facebook has an amazing earnings and then they'll say something about how they're going to spend some of that money on a new project, and it just gets pounded into the dirt, right? Even after a great earnings, because they didn't do a forward guidance that the market liked. Yeah, that's true. They're certainly not humble. So is this going to be the one though, right? And these options are just insane. You could trade the SPX for the price of these options. So even with the size of those options, trying to put on some trade where, like an either or, the margin requirements alone just are staggering. I would say if you really want to play NVIDIA, look at some ETFs that have NVIDIA in it and trade one of those instead, right? Trade it through a proxy of some other product. A lot of things have NVIDIA in it. That would be a safer play, or at least a play that doesn't require so much capital and margin, right? I don't know that safer is necessarily the right word to use there, but and it very likely will be big enough to knock this market down. Now, it won't spin us out into a bear market. We're not going to see global recessions and great financial crisis style collapse of the markets just because of Nvidia earnings. It's not like that. But short duration, Nvidia having a bad earnings could definitely put us back inside that range in the S&P that we just got out of. Putting us right back in that box. It could easily do that. And that would just slow things down a little bit, right? That's it. The 5,000 puts that we sold in the ES are still they're still good. I don't see any threat to them at this point. So we got pot stocks up. Um, yeah, yeah. There's a couple of ways you could do it. We're on the weekly at the moment. You can measure just this pullback and set a 111 in there. You can also measure just this large candle. You can measure last week's range. Um, well, actually, this is last week's range. So this 111, analyzing it from this point, we look at the 111 as a warning center. It can breach through the other side just like it did, but it hasn't yet hit that 1, 2, 3, 6, and we would want it to do that first. At least touch it, but usually get above it, get through it. And it didn't even get to it, let alone through it. So we still consider this a pause at the 111. Now, it hasn't fallen all the way back out. If it falls back down below 53.64, then then that 111 is legit rejection, and it failed there. So the warning center in full view. But so far, all we've done is just pull back a little bit. And that means that we could just continue this rally, especially with that doji day yesterday, Friday, that this is nothing more than a pullback, and it's just a continuation right up into that 1, 2, 3, 6. Now, for when it comes to things like dynamic fib placement and moving up after a breakout to 1, 2, 3, 6, bringing the fibs up, I've never done it on a daily like that. That's a intraday dynamic fib placement. Usually, if I'm doing fib analysis on a daily, I'll do the individual candles or a pullback or a zone or a range having a particular purpose, but I've never done a dynamic fib adjustment. I'm sure it can be tested and proven. You just start back here, measure this zone. That would plot your 1, 2, 3, 6. Then you get your opposite candle color, move your fibs. That would plot your next level. Wait for your opposite candle, move your fibs. And if you could prove that it happens here, then you could easily use it at our new location. But right now, that 111 has to hold, and we can fade underneath it just like we did Friday. As long as we don't come all the way back down, then we're still in. Because think about the Busby, right? We can come back and we can bounce and get that Busby and go, but we can't come back down and close below that line. So we got pot stocks, but they're just a couple of dashes. There's no flow there in the pot space. gold miners are trying, but they're already starting to fade a little bit. This is a like big breakaway gap, and it looks like an exhaustion gap at this point. Going to fade right back down. Nat gas has just been on a tear. Certainly doesn't look like it's done yet, but if we were ever wanting to look for an example of a parabolic market, that's a really good example. It's very likely we can get another 70 cents, get into that $20 zone and hit this resistance. Uranium, nice breakout last week, kind of needs to stick. So far, it's up a little bit this morning, but it's really not doing much. Copper was on the news a lot this morning. They're continuing to do really good, but I continue to stress that that's another inflation point, something to be concerned of. And energy's up a little bit. China down, silver down, which is odd because we got gold miners up and silver down. So I'd say, watch the Feds today. Look for a reason to see this market break out and go, but I wouldn't really expect too much out of the market yet. I think the NVDA is just big enough to cause people concern, and it doesn't even matter how much money for analysis and research that a company can spend to dig into this question. When it comes to the end of it, NVIDIA is going to hold that card really close to its chest, and it's not going to give anybody a wink and a nod. There's no way to tell which way it's going to go. A lot of these events, if you got enough money, you can dig into which way the wind is going to blow. But how do you dig into this one? I think they'll play it caution. They'll just hedge the hell out of it and wait for them to report. And then you got to worry about, nobody cared about retail traders until suddenly they had to care about retail traders. And speculation trading, even in something as big as NVIDIA, oh, it's going to happen. So we could be in a really boring sideways week until Wednesday. I hope not, but we'll see. Looking at what we had so far this morning, we don't have any reason to believe it's going to be that we're going to go anywhere. The one good thing that I can say is that at least we're set up for some intraday trades. We've got our high and our low set for the Globex. If we break our Globex low, it puts us back inside Friday's ranges. So then we can play, the RTH high of yesterday, the close, the Globex high, the RTH open, the Globex low, and then yesterday's low. We got all of those pivot points from yesterday that we can play. And we can measure this entire zone, like we've talked about before, and project those ranges to the upside and to the downside. It's not the one. And that way, no matter which way it goes, you've got levels. Be careful, be safe. I'll see you all tomorrow.